Next, we are going to bring up Marc Meyer of Crowdz.
Good morning, good afternoon, everyone. My name is Marc Meyer. I'm based in London. I work for a company called Crowdz. The company is headquartered in Campbell in California, and we have two sites, one in the US and one in London. Myself, I'm responsible of the products, everything related to product within the organizations. And the way I would like to structure the presentation is just going to give you about what problem we're solving and why we believe blockchain can also be very disruptive into this world. So basically, just gonna.
I was going to say, Marc, you got a few. I don't know if you heard earlier, so I don't want you to rush through it. Absolutely, take an extra 5 to 8, 10 minutes. Based on
No worries. I'll try to keep it short and tight. But right. I appreciate. So basically, we operate in the B2B world, and if you're familiar with the B2B and how payments operates, it's basically suppliers sell goods to buyers, and they usually get paid very late, 90 days, 120 days, and it creates stress in organizations, suppliers, because basically they wait too long to basically receive the cash. They still need to pay salaries, pay the operational costs, and that's the stress they're having. They usually go to invoice factoring, so basically they factor invoices to investors, mostly large banks, so the ABN AMRO, Citibank, it could be any banks or a large organization. And what they experience basically, particularly if you are an SME, you have the rates are high, you don't necessarily get served, and most of the funders don't want to buy your invoices because you're quite risky. From that perspective. Of course, if you are, if you're Microsoft or Facebook or Philips, that's easier because you're pretty sure that you're going to get reimbursed. So this is really an untapped market. Many companies are trying to address this environment. And what we're doing is basically we have created a marketplace whereby suppliers, i.e. sellers here, can basically upload the invoices on a platform. We run all checks on the sellers, on the invoices, and basically we match them with funders who can basically invest on those untapped assets, with basically around the 8 to 12%, even more APRs whenever they buy these invoices. And in this world is basically, with high inflation, stock market, equity market down or very unstable at the moment, bond rate very low, it's still quite an interesting investment. So we offer this solution. We also have what we call recurring revenue or SaaS contracts. So basically that's something we just launched and allows you to sell your recurring, if you're the supplier, to sell recurring contracts on the platform. So, and I just wanted to touch that as well. We offer, we generated a new score, a risk score based on the invoices. I'm not going to spend too much in the details, but we aggregate a lot of data from different sources, internal and external, and we assess the buyer and the seller, and we score the probability of repayments, which is quite unique in this industry. And finally, we've been quite successful so far. I mean, in about a year, we funded more than 50 million invoices, and we have a target to fund 1 billion within a year. And we have, as our say flagship customers, we have Meta. We're launching a program with City of Detroit. 2 weeks. We also have a program in Australia as well with a fund called EG. So basically, that's already an improvement in this industry. Having said that, the invoices you trade in this world, is still based on legacy technologies, particularly in the world of trade finance. Is still very restrictive, opaque, it's very centralized, expensive, a lot of manual intervention, still a lot, and very illiquid in the sense that you have this asset, you buy this asset, it's still very difficult to trade them. Whether it's even for like big trade finance receivable, it's still difficult to trade these invoices on secondary markets. It's also very difficult to have very complex transactions. So imagine you want to syndicate a large invoice, so let's say 100 million, and syndicate this with several investors. Banks today still trade or deal that with spreadsheets. Secondary market is done by spreadsheets. It is very, very antique environments, and hence it creates a lot of fats, a lot of mistakes, disputes, slow decision making, and basically making this market very inefficient, and hence again a very costly environment to for SME to get liquidity on this market. And I think this is where we believe. So I'm just gonna go first to the so putting the invoices on the chain with a smart contract actually will help. Well, first of all, we can argue it's just a ledger, but it's beyond just a ledger. If we put all the information on an NFT, it actually becomes very efficient to, well, first of all, have instant transactions, automation, have more liquidity on the market, but also being able to trade or create more complex transactions, such as fragmenting and invoices for syndications, having secondary markets, allowing peer-to-peer transactions. So you can even imagine like a large bank like Barclays trading directly with Lloyds in the UK, for example. All of this stuff could be streamlined and be transparent, auditable, immutable on the blockchain, as opposed to do that on the spreadsheet, basically. And I think that's really where the breakthrough is with this environment. And we decided to basically starting to put all of our invoices onto the blockchain. We're planning to use on an Ethereum sidechain, so Polygon. I'll come to that later, but that's I think the value we see of doing this. So it's just a simple slide to basically show what the ecosystem could look like. So our whole ecosystem is called Avalon. I think it's based on an imaginary island from the British culture, British culture, I believe. But basically, our ambition is to be, chain agnostic. We obviously starting on Polygon, but we're going to put every invoices on NFT. We call it FTR for NFT receivables, and with a smart contract with all the invoice financing life cycle, written into the contract, and we have all critical information stored in IPFS and all private information into our database. We have to keep some aspects of confidentiality due to GDPR rules, and basically not everyone wants to know that you're actually trading invoices. So that's why we're very careful with data protection. So everything is actually on an NFT. We also planning to create a native tokens to create good behavior via rewards and other mechanism. And you'll be able to trade your NFTs or invoice on a primary and secondary market. But that's actually our environment. When we go beyond that, we can imagine, it could be traded on peer-to-peer, but also even the beauty of it would be tradable on other marketplaces in the future. That's something we're thinking about. We also, I think, the reality is we'll never be completely decentralized, and I think we don't want to be completely decentralized. We want to take what we believe create efficiencies, but there are still aspects of centralization. So and at least at this moment, we still need to deal with fiat currency. We're discussing with founders that are actually happy to invest in stable coins and buy this invoice in stable coins, but on the other side, the sellers probably not ready to take crypto. So we still need to deal with fiat, but we want to blend these two stable coins, being able to buy NFTs with stable coins, doing off-ramp to transfer that into fiat, and vice versa when the seller reimburses the invoices. So that's our vision, and basically it's any chain, any invoices, any currency, whether it's fiat or crypto, basically. I come to that. We're using Polygon at the moment because for two reasons. Obviously the gas fees, but also from we want to use proof of stake as opposed to a proof of work from an energy perspective as well. And yeah, finally, I'm just going to go through the our roadmap and what we want to do in the future. We're starting at the moment, so as mentioned, we have a big endeavor right now to move all of our invoices into NFTs. So that's basically quite simple, but it's a big undertaking to migrate our portfolio onto a non-fungible token. Also, we have white papers and everything that goes along with that, but we want to make sure that first of all everything works well. So everybody trading on our platform, they don't know that actually they're trading and on the chain. But then comes in the future, we want to be able to buy the invoices with stable coins. We will enable secondary markets in the future. We will introduce, actually the date's not correct here, sorry, but Q1 2023, probably we'll have the native token. And finally, so we started to, just for history, we started to think about models like Aave or Compound, where basically you have liquidity, or even like one of our competitors, Centrifuge, having liquidity pools. The problem is we're very, very careful with regulation, because at the moment we are trading assets and not securities. But once you start having liquidity pools and you start fragmenting invoices, you entering the world of securities. So some countries are more relaxed than others in that regard. But as the company is headquartered in the US, and obviously we want to trade in the US, it's still our biggest market. We are really, really careful about what we can or can't do. So when I mention about very complex transactions, such as fragmentation of receivables, invoices, yeah, that's creating an environment where we have securities, and then we have to become more and more regulated. But we are very careful with all our lawyers that we don't get fined or we don't doing something stupid. We're dealing with large institutions, and we respect the environment. A lot of people in the company comes from financial services, so we understand that that's something we need to be careful. And yeah, that's pretty much it for me.
Great stuff, Marc. Thank you very much for gracing the stage and sharing more about what you guys are working on. I saw a message come in say, very interesting. So yeah, and Marc, where's the best place to track you down? LinkedIn, Twitter, or do you Telegram?
Give me a call. It's quicker. No, LinkedIn is usually the best way for me to get in touch with me. But thank you very much for listening.
Great. All right. Well, thanks again, Marc. Thanks to all our speakers. This track will end here in the next about 10 minutes or so. We're going to go back to the main stage. So you got a few minutes to take a break, maybe go to the exhibit hall, but we will have, just so you're aware, on the main stage, we'll finish it off with a 20-minute session on regulatory issues in Ethereum and Web3. We got a great set of speakers there. So you got a few minutes to take a break. But again, thanks to our speakers. Thanks to you attendees for checking out this session, and we'll see you soon.